the lead independent director of two listed companies, Globe Telecom and Ayala Land Logistics Holdings Corporation, and an independent director of two other listed firms, Ayala Land and the National Reinsurance Corporation of the Philippines. He is also chairman of Singapore Life, a director of Esquire Financing, the Cullinan Group, Techno Marine Philippines, Seven Tall Trees Events Company, and Mobile Group Inc. He is a member of Brother Bo Sanchez Mastermind Group and is cited by many as one of the best leadership, business strategy, investments, and marketing and sales speakers in the country today. He is the author of two books, Trailblazing Success and Firing on All Cylinders, both certified national bestsellers. He's the president and CEO of Rampver Financials. So friends, let's give it up for Mr. Rex Mendoza.
Thank you, Sila. And good afternoon to all. Good evening, good morning to all the other brothers and sisters that we have that are listening and watching all over the world. First of all, let me thank all of you. Out of your very busy schedule, you opted to be with us right now. And that's the reason why we really like to make this quite a huge learning experience. Yun nga lang po, medyo napansin ko, after Andrew, parang tapos na kagad yung objective, no? Basically, with what Andrew said, it's almost like me, myself, I'd really want to act on everything that he has mentioned thus far because somehow my own commitment to some of those funds are not yet at a very high level. But then again, come to think of it, the role that I'll be having this afternoon is to even get it to a higher level because sometimes we're so focused on the trees, and that's why many of us are sometimes caught in the quagmire of timing the market, making sure we earn in every position that we have, in any investment instrument that we buy. And we get to miss out on the forest. Now, Andrew gave you the forest. Andrew gave you the opportunities of getting a wider scope, getting a higher level of diversification. I'll take that another notch. I'd really want people now to think asset allocation. Now, don't get me wrong. If you're a, startup investor, you just learned beginning the FeastCon, which was just held this weekend, or you're somehow very exposed to the market, you've been investing for the longest time, this session this afternoon can be worthwhile for you. Because I'm not going to be discussing, opportunistic. Opportunities are there all the time. I don't want to be discussing opportunistic, moves. I really want us as investors to really take this on with a long-term view. And because of that, I think you got it from my title, it's going to be asset allocation. So a lot of people would think diversification and asset allocation are the same. They're not. Diversification is but a benefit of asset allocation. And that's the reason why this discussion, and then let me tell you quite honestly, as I've said, beginner ka man or expert ka na, this will get you some value because the important thing here is this. Let's really go back to how you've been doing things. And are we really doing things the right way? I'm not saying this is the right way. I'm not even going to say that. I'm going to saying these are the concepts and principles behind doing things the right way. And how we get to execute on all of these will be dependent on the way we read ourselves, the way we read our own considerations. So let me share my slides. Basically, I focus on, as I've mentioned, asset allocation, but I cannot help it with what's happening to the market. I think many of you are here this afternoon to probably take my view, much like Andrew's view, ATRAM's view, you'd want to take Rex Mendoza's view and Rampver's view. And that's the reason why, I guess that's how lucky we all are, right? Because certainly, I don't take ATRAM's view just like that. As an investor, I listen to a lot of other people. I'm not an economist, but I have go-to economists. So I have Dr. Alvin Ang, who's like multi-awarded for all of the studies that they've done at the Ateneo Center for Economic Research and Development. I go to other players, market players like Marvin Hermo, Edward Lee. And you see, my view is a summary of all that. I practically summarized in my head what their views are. And I get to synthesize that. And guess what I'll do? I'll do that for you. So that, all of these conversations, all of these readings, all of these articles, and all of that experience encapsulates something you can think of, you can analyze and evaluate, and do something about. Because this is very important. On top of the concepts and principles, we talk about what's happening to the market. And over what's happening to the market, how we see things panning out. That's important. But the most important thing is, what do we do about them? See, education, information without execution is always entertainment. So clearly, friends would really want to do something about this. So what should we do about it? The battle royale between growth and risk will always cover your track to reaching your financial goals. Reaching your financial objectives will always have this tug of war. And we will always be, consumed by thinking about how to earn more, how to add on to this. And that's the reason why, I'm going to call Jason. Jason, can we post my first poll question? I'm going to be having poll questions with you guys. I'd want you to get this into an interactive mode. We're not face-to-face, but we're going to simulate that. Okay, so my question is this. Which of these would be the biggest part of your investment portfolio as it stands currently? Time deposits and bank accounts, bonds, long-term fixed income instruments, stocks or equities, mutual funds or managed funds, real estate, and lastly, others, Bitcoin, art, precious gems, other collectibles. So you have all of that. What's the biggest component of your investment portfolio today? I'll give you a few seconds and let's see how the crowd does this. Okay, Jason, do we have results? Can we see results now? Wow! Mukhang fans club kayo lahat ng Rampver. Maraming mutual funds. And the others would really be in equities. Okay. There's nothing really wrong with that. But this is a session where we can step back and probably get to think now. Is our investment portfolio the way it is because of a very direct, deliberate strategy? Or is it like that because it just happened to be like that? Because it's a synopsis of all the decisions I've made all through these years, and when I take a look at it, it's like that. Let me tell you what the truth is. For many of you, you won't even know. Because rarely will investors even have an inventory of all the investment assets that they have. Very little will really have, even in a form of an Excel file, all the investments categorized and weighted. We somehow accumulate but not step back and analyze. And that's why we have news for you. You will have to do it. You will have to do it because we are saying that we make mistakes because we get too emotional. And when markets go up and down, and this is going to be very relevant this year, 2020, markets go up and down, we somehow make decisions on it. And again, it's a battle between greed and fear. But that is the point. The point is, when you invest and your main objective, listen to this, main objective is make more money, you will be throwing a lot of considerations on the window. The biggest consideration being risk. And you get to miss out on what you're really doing it for. See, a lot of us invest not to make more money, but to achieve financial goals, to fulfill financial dreams. Whether that's education for your children, retirement, home for the family, or something more intermediate, even travel. Even travel with your spouse, even that 10th honeymoon. That's an objective. But are you just investing and doing things to earn more money and hoping one day you have enough money to fund all of these objectives? Isn't it the other way around? That the objectives by themselves are the ones that draw your requirement for investing in a particular instrument anyway? So let me get down to this. I mean, asset allocation is an investment strategy. It's one that directs people and institutions to invest in different asset classes, such as time deposits, stocks, bonds, managed funds, real estate, insurance, and cash, to build a portfolio that balances risk and reward based on an investor's risk tolerance, time horizon, goals, and objectives. Take a look at what I said. Nasaan dyan yung market? Nasaan dyan yung pandemic? Nasaan dyan yung growth? Nasaan dyan yung crash? It's not there. Because when we get to strategic investing and asset allocation, we don't consider those things. In fact, the output of strategic investing and asset allocation is performance despite what the environment is doing. In fact, when negative things happen in the environment, asset allocation is supposed to minimize the effect of that. So instead of always trying to maneuver to outdo a market, the key step in long-term investing is to look at how you can diversify, because as Andrew showed us, different investments do differently every year. So if you're bet on, like, let's say, I heard this many times, stocks, top performing asset class ever. Do I disagree with that? No. But even if it's true that stocks are the best performing asset class ever, it's not gonna be top every year. In fact, there are years when it's at the bottom. Where does that put you if you're totally invested just in stocks? So the key is to put all of these things together, because all of these investments rise and fall differently within given markets. So dapat daw, whether maliit kang investor or malaki kang investor, nag-allocate ka ng assets so that whatever happens to the environment, you will fulfill your financial goals. Now, again, let me repeat this. There would be technical things that I will discuss, but don't mind it. Minsan nakakagulo po yung graph eh. Minsan pag nakakakita tayo ng graph, natatakot na tayo. Ayaw na nating tingnan kasi it's too technical. Don't worry. This is Rampver Financials. We're not here to confuse you. In fact, I'm using the graphs that fund managers do. And there's one objective that I have for this afternoon. Simplify it for you. Simplify it for you. Ang sinasabi po nitong graph na ito, there is an efficient frontier. If you take on risk that's increasing, you should be able to earn more within a particular efficient frontier. Ibig sabihin, pag nag-i-invest ka in a riskier instrument and you're not earning enough from it, then there's no point. If you take more risk, you're supposed to take in more reward. But, meron kang profile eh. Natatandaan nyo, some of you are invested, or many of you are invested in mutual funds. You sign this application form that has a questionnaire on it, and it's your investor profile. What is the fund house doing? They want you to analyze yourself and check, are you a conservative investor? Are you a balanced investor? Are you a risk-focused investor? Kasi alam nyo, ganitong kasimple yan. It's not good for someone who has a very low appetite for risk to invest in a high-growth, high-risk instrument. Kasi ang mangyayari, yung sinabi ng brother ko sa akin, ingatan mo yan, Rex, sa doktor lang mapupunta yung pera mo. Because my brother is a doctor and he's saying, all of my clients who've been trying to earn so much, he says, at the tail end of their life, will give all of their money to us anyway. Because of all of these ups and downs, these roller coaster rides, magkaka-alta presyon sila, magkakasakit sila sa puso, sa doktor pupunta yan. So, ang importante po dito, if you have a risk profile, try not to veer too much away from that. Or else, you're going to be uncomfortable moving forward. Kasi minsan, excited tayo mag-equities, but we're not ready for the volatile ride. And if you're not ready for the volatile ride, you might earn more money. There's no arguing that. But are you going to enjoy the process? Managing our funds, managing our assets has to be an enjoyable process. Because if it's not enjoyable, why do it? If it's not gonna make you happy, if it's not gonna make you comfortable and secure, why do it? Di ba? Abe, pumasok tayo sa, like let's say, Enchanted Kingdom or Disneyland. I think many of you have been to this, fun places, right? There are times na hindi kayo mapilit sumakay sa roller coaster. You cannot be forced to ride in a roller coaster. Pang-tikap lang kayo eh. Di ba? Pang simple lang na rides. And then when you ride something like a roller coaster, are you going to enjoy it? Maybe you're gonna enjoy it once it's done. Once it's done. Now, I'm so sorry for this, but this is the next poll. Sabi nila, this is the worst question you can ask women, but since I'm not face-to-face with you anyway, and you can practically hide your identity, we don't know what your answer is, I'm gonna ask you this next poll. Ito po, honesty lang ha? Honesty. How old are you? 30 and below. 31 to 40. 41 to 50. 51 to 60. 61 to 70. 71 and above. Okay? So sagutin po natin yan. Siguro naman, alam natin yan, ha? And as I've said, let's be honest about this. Okay. So, Jason, do I have the answers now? Wow. Ang bata pala ng ating crowd. Majority would be 31 to 40, followed equally by below 30 and 41 to 50. You know why we ask that? Because age is going to direct your investment behavior. It has to. It has to. So if risk is one determinant, the other determinant on risk appetite is your age. Because if you don't have enough time, then having a riskier position can also put you at a huge disadvantage. So kung makikita nyo on this square, this blue square on the left, see, you will see that when a person is younger, you can have a bigger growth component in your portfolio. But as you get older, closer to retirement, closer to enjoying your twilight years, the best is to dial down on that and focus on defensive, which will mean fixed income, which will mean cash flow. Doon na tayo nakafocus ngayon kasi delikado. Now, people are saying, wow, but that's still a huge growth position, Rex, ha? That's 70s na, 65 na. Ganun ba dapat? Malaki pa din yung risk position and growth? Let me tell you this. I think this is one of the most misunderstood areas of retirement planning. When people think, pagdating nila ng 65 to 70, lahat fixed income na. Mali. Why? Because in the olden days, many of us live only between 10 to 15 years in retirement. Dati 20 years of retirement, mabigat na yun eh, di ba? Retirement age 60 or 65, dagdagan mo ng 20, then maybe 80. But you see, medical and technological developments have led people to have what? A longer lifespan. So now, we're not living 15 to 20 years in retirement, we're living 25 to 30 years in retirement. Which means when you retire, you have to have a growth portfolio kasi 20 years pa, 30 years pa yan eh. So it's not that you're gonna be fixed income all the time because when you do that, guess what? Double whammy, right? You're not gonna earn enough and then the value of your kitty is going down because inflation will always be behind fixed income interest. So we'll have to watch that out and that's why we still need to blend it. The point here is this, as you grow older, your commitment to growth assets should be less. Yun lang naman daw yung point doon. But as I've said earlier, hindi pwedeng ibig sabihin diversify mo, okay na eh. In fact, when we say asset allocation, as I've said, pasok ang real estate, pasok ang insurance, because we need to look at life in a more holistic sense. But this is the biggest thing I want many people to realize. Hirap na hirap kayo to choose. Oh, ano ba? You know, when people call me, 4 out of 5 queries are specific to investment instruments. Okay ba ang Ayala Land, sir? Aakyat ba ang globe? Ganun ang mga tanong eh. Specific investment instrument choices. Sometimes even fund choices. But you see, I'm telling them, you're fixated on that. You know how much that gives? Security selection gives only 5%. In a long-term performance, 5% lang yan. Market timing, in and out? Tell me, whether all of you guys admit it or not, the truth is, more than 90% of people who trade lose money. More than 90%. So yung timing the market, may problema din yan. But where does the real performance come from? It's in asset allocation. 91%. I've seen many studies. This is the Fiduciary Journal of the US. But there are studies, ang low niyan, mga nasa 65 to 68. But all the time, it's asset allocation more than any of these other things. So why are we going to be so fixated, as I've said, on choosing certain instruments where the real return, the real yield is born out of asset allocation? Because there are two great benefits of asset allocation. I mentioned this earlier. Diversification. You lower the overall risk of a portfolio because your different asset classes perform differently in given markets. Diba? Like for example, okay, nag-drop ngayon ng equities like in March, right? Did you see real estate drop by that much? We think it's gonna drop, but it hasn't even dropped yet. So for the guys who are in real estate, there's a part of their value that's okay. Last year or 2 years ago, people who are invested in fixed income, milya-milya, iwan sila ng mga taong nasa equity. But this year, you see the bond fund? Wow, it turned what? 7% net of all taxes. All equities are red. So if you're invested in these two instruments, they kind of balance each other out. So you have to have a balancing act with all of these. Now, how will you do that balancing act depends on your own personal considerations. As we mentioned earlier, time horizon, risk appetite, and the goals that you want to accomplish. Putting all of your eggs in one basket, well, Andrew talked about eggs for the longest time, right? So hindi ko na ulitin yung eggs niya. But ang importante, kailangan walang concentration risk. But let me tell you, because there is no concentration risk, you get downside protection. That's very important. Downside protection. Pero syempre, hindi ka rin jackpot. Yun ang problema eh. I think many of the Filipinos like to have the jackpot. But the thing is, ilang beses yung jackpot? Ilang beses yung bagsak? Doon tayo namang problema. While it's very important that we want to be able to do that for a trading account, we cannot bet our retirement, our long-term goals on all of these trading activities. So very important that we see, how these things act up over time. Now, there's one principle I'd want to be able to share with you. This is very important. Take care of the downside, the upside will take care of itself. Let me repeat that. If you take care of the downside, the upside will take care of itself. That's a very important thing for me because, see, many people are always looking for the jugular, looking for the 5-bagger, the 3-bagger. How many times do they happen? The other benefit is this, and for me, this is more important. Asset allocation gives you discipline. Human nature has its way of questioning. It forces us to question strategies that are not working. So pag hindi ka naka-asset allocation and you're so focused on just simply earning more money in your trades, you know what happens? When you make certain mistakes, you question it, you do completely the opposite. So what happens? When markets drop, it is when people get out of equities and put their money in fixed. It's not working, they change it. Hindi nila alam the curve is always delayed, right? So the emotion, is the one that brings forth the market. I'll quote John Templeton on this later. But the more important thing is this. He says, pessimism is when bull markets are born. In fact, it's when euphoria happens that bull markets die. So kailangan, hindi ka pala masyadong apektado so that when you're doing asset allocation, then you do things in a very objective way. And I give you an example. Last March, markets dropped. If you're invested in equities, that shrunk. Which means, if you're ready to be 25% in equities for your entire investment portfolio, suddenly it's only 15 to 20%. So lumiit siya as a component of your portfolio, di ba? Yung equity fund mo, lumiit siya. So yung buong base mo, as a component, lumiit na siya. So anong dapat kailangan mong gawin? You were supposed to shift part of your income to your equity-laced involvements. In asset allocation, you balance it out, right? So you have to rebalance. So ano nangyari? It kind of forces you to buy at the wrong time. To buy when it's emotionally wrong for other people. And for the people who've been investing since March on a continuous basis, sorry, but I guess, our people, our team, minsan di ba makulit, tawag ng tawag sa inyo, time to add, please sir, time to add. Tawag ng tawag yung mga yan because they want you to make the right decision. But sometimes emotionally, we're not ready for it. That's why we did not heed their call. Today, in the last 3 weeks, the market's so frantic to catch up. The market's so frantic because people who did not buy are trying to buy now. And when they come in hordes, guess what happens? Markets fly. So kailangan, dun tayo sa asset allocation where patience is built in. You have faith in the time-tested long-term strategy and you minimize the impact of your emotions. Okay? Kasi po itong emotions na to is real. From optimism to optimism, we will go through euphoria, despondency, capitulation. If we cannot control that, then we're going to be in a bad position. So, all of our investments should be in a particular managed weighting, where the focus is to be a balancing act between growth and risk, also to minimize leakages in terms of taxes, can have access and liquidity, and then distribution. So, if you're on the conservative side, older side, then we go on to fixed income instruments, money market, and bonds. When you're accumulating, we go to businesses, equity investment, equity-laced funds. If we're now trying to protect our asset base, we're now thinking legacy, then we have to be part of real estate and get ourselves into stores of value like gold and precious gems, not jewelry, precious gems, very different. It's an investment class by itself. And lastly, all throughout, there is a protection, veil that is insurance and other investments. So this has to be the way, because in the end, what's wealth management anyway? Wealth management is a full-scale needs-based management that assists individuals and families in the accumulation, preservation, and transfer of wealth by customizing the right products and solutions. That's a mouthful. But ang importante po dyan ganito, ang habol natin, fulfilled lives and sustainable legacy. We want to be happy. While staying responsible, we want to be happy. We want to live a fulfilled life. But, Pilipino tayo eh. Gusto din natin may maiwan tayo sa ating mga mahal sa buhay. That has to be a legacy. So, in doing that, in having all of these goals, what do we do now? We now have to see stages of our life where we have to be accumulating, we have to be preserving, then we have to be moving towards a transfer. Your investment portfolio should change based on these things. When you're in accumulation, there has to be too much of growth within your portfolio. Focus on growth because you are accumulating. Then, when you're beginning to preserve, then we go on to harder assets. And then when we're trying to move towards transfer and maybe living a fruitful and meaningful twilight set of years, then we're really gonna be having that safe orientation. But let me focus on that because I'm going to give you later on a rule of thumb as to what and how much. But what and how much changes depending on who you are and what you have. So again, it's a piece of homework. I hope the representatives of Rampver who invited you can do this thing with you. Because we can handhold people. We can go through a financial planning model with them so that at the very least, they begin to, sabihin na natin, not overhaul, but simply refine. Okay, we can start with the refinement. But we have to do that now because the opportunity is here. The opportunity is here. Kasi po simple lang. For example, they say 10% should be in fixed income because that would be our emergency fund. That would be an emergency fund. So I I don't really care what that 10% is. Is it 100,000 or 10 million? Now, some people are worth more than 100 million. So their fixed income, if it's 10%, will be what? 10 million. Now give me an emergency that's worth 10 million. Right? So even with the 10%, we can even allocate that. So much so that part of it would be in, like, let's say, a deposit in an ATM or a time deposit that we can easily take out in case of an emergency. But out of 10 million, that could be 1 million. 9 million can be in money market funds because we can take that out in 2 to 3 days. And maybe even in bond funds, which we need to give about 4 to 5 days to be able to collect. But the investment is there earning a weighted average that's high for that whole composition. That's very important. It can also go the other way around. If you're in growth, does that mean you're only in Philippine equities, as Andrew said? Or can you be involved in other positions? That's the reason why I share this. It's a rule of thumb. And because it's a rule of thumb, people should be able to refine it based on their own individual interest. Like for some of us, 10% can be too much. Because if your net worth is 500 million, 10% of that is 50 million. That will be in a savings account. That would be in time deposits. That's too much. Your investment in emergencies would probably be what? At most 1 to 2 million. Because you can still withdraw. I'm not saying you're not going to withdraw part of it. But if you have a business, sometimes business is going to be getting a lion's share of that proportion. In fact, I hear a lot of people, a lot of friends telling me, Rex, why will I have to buy insurance? Why will I have to, invest in all of these instruments? My business is earning so much. I'm going to be wasting the yield, the earnings, if I put it in all of these other instruments. Pero alam nyo, sabi nila, nagkamali sila for this year. And you see, once something happens, like what happened to us in this pandemic, you can get wiped out. You can get wiped out. So asset allocation is the discipline that is required. It is very important that we get to do asset allocation. Now, I can tell you this. Many people will say you can do asset allocations with certain financial institutions. I'm not here to tell you we're the best at it. No. I'm just telling you the difference. Because in banks, they will obviously tell you that they have the best products. They will tell you that they have the best products. In certain other institutions, they will also tell you that they have the best products. It is different when one tells you that this is the entire market and this, for that particular need, is the best product. Let me compare a financial advisor who's independent than a financial institution's advisor that is proprietary. Comparative po niyan ganito. Yung isa, sales lady sa isang tindahan. Siyempre, yung sales lady na yon, sasabihin niya, yan ang pinakamagaganda dahil yan ang tinitinda niya. A real financial advisor that's independent is a personal shopper. A personal shopper knows all of the stores within a given mall and even beyond that, knows all of the brands, and if you tell him what you need, she or he can actually buy the right one that matches it. Which is not going to be attached to any store. That's what we want when we do asset allocation. In fact, someone who can even tell you about real estate, someone who can tell you about insurance, someone who can tell you other instruments. It's not just the diversification within an asset class. It's a diversification within all asset classes. Because that's key. And the thing is this, when the shop is closed, you're done. You cannot buy. The personal shopper can get that for you. The independent financial advisor can actually get it for you. You can ask him or her for advice any time of the day. So the key is to focus on your goals. Goals are the real base of all this. See, when everything is based on goals, you take out all the negative biases. Nakafocus tayo, ano bang gusto mong mangyari? Doon tayo nakafocus sa anong gusto mong mangyari because kung anong gusto mong mangyari, yun ang tatapatan ng produkto. Hindi yung produkto tapos saka mo titingnan anong nga palang gusto kong mangyari. Not the other way around. It is not the other way around. So, let's focus on the market now. Government, obviously quite ineffective on the health side. We'll have to admit that. I don't want this to be a political discussion, but I think you'll all agree with me. We have the longest lockdown in Asia, but we don't have the right numbers as well in terms of infections and deaths. But if I'm going to be looking at the economic team of this government, obviously, they've done pretty well. Sasabihin ko naman po, maganda yung ginawa ng economic team, maganda ang ginagawa ng economic team. And that shows in the results. Look at this. As I've said, with the longest lockdown in Asia, we have 420,000 infections, over 8,000 people dead. Even with the longest lockdown. So medyo may konting kailangan pong ayusin tayo dito. But the economic side, the numbers can actually be daunting. Second quarter GDP was down 16.9. They initially announced it to be 16.5. Now it's 16.9. Third quarter improvement, 11.5. Negative. Consumer spending at negative 9. Inflation at negative 2.5. So it's not exactly a good scorecard. But Rex, why are you saying it's okay? Because all countries in the world are going through this. All countries in the world are going through this. The important thing is how healthy that person is given the infection that's happening to him. See, if you are going to survive, it is not actually the virus that's going to be the determinant of it. It's going to be your body. Ganon din po sa economy. The impact of the pandemic on the economy is not dependent on how strong that impact is, but how strong the economy is and how the government and our leaders are doing something about it. This is the PSEI Stock Exchange Index. It's usually touted to be a forward-looking indicator. It captures the sentiments of big business and of investors in a given economy. It's a wedge formation already. And many people who are familiar with technicals will tell you a wedge position like this will get a market into a decision point. And by the middle of October, those decision points are clearly showing up. That's what you call a breakout. But many people did not notice. Why? Because they're all emotionally drained with what COVID is doing to themselves and their businesses. The government was practically doing its job. In terms of fiscal support, we're not overdoing it and we're not underdoing it either. We are number 6 of 10 in fiscal support. In terms of direct income support, ayuda, social amelioration, we're number 5 of 9. So, as I've said, not overdoing it, but the government spent. And since businesses are down, people lost jobs, guess what? Obviously, we got ourselves into a deficit. Big money spending to aid people and businesses obviously leads to a deficit. And that's -7 for the percentage over GDP. So ano pong ibig sabihin nito? As a country, nagkagasta tayo, wala naman tayong ganong kalaking pera, so kailangan mangutang tayo. Kailangan tayong mangutang. At nangutang po tayo. Now, this is very important. Guys, ano bang inutang natin? Domestic. You know, when people think about borrowing for a country, there are two options, external borrowing and domestic borrowing. You can only do domestic borrowing if you can generate the money from within. And we were able to do that. Bakit po relevant yun? Bakit napakabigat na factor nun? You see, in the past, when we cannot generate internal funds, what did we do? Nangutang tayo sa labas. Remember the time when they said we're going to be the next Argentina, that we're not going to be paying for our loans? Yan po ang problema. Medyo nagkataon po na talagang, medyo po talagang hindi tayo nakabayad. And we don't have options. You see, it's very different when you do domestic borrowing. Let me just tell you quite frankly, pag ang utang mo domestic, it's in peso. Pag wala ka ng pambayad, anong pwedeng gawin ng gobyerno? The government can print money. It's domestic borrowing. The government can print money. Now, people will say, hindi ba Rex inflationary yun? Hindi ba masama yun? Ano po ang mas masama? Default ka internationally? Or sumipa ng konti ang inflation mo? That's the difference. In the crisis of the past, we always relied on external debt. Crisis today, we're borrowing domestically. And that's the reason why our rating is actually where it is. It is not and has not been downgraded. It's watched closely, but it's not downgraded. This is a major point. And that's the reason why the government can push the rates down. Whether it's the guiding rate, whether it's the reserve requirement, they're pushing rates down. Can you look at how interest rates were in 1997? How interest rates were in 2008? Just two crises that we've seen. Look at where the rates are now. Alam nyo, di ba, mas worried na worried tayo in a crisis when number one, interest rates go up, people cannot pay for their loans, people cannot pay for the real estate they bought. What do? They just stop paying. They just sell assets to the ground. Eh ngayon hindi, baliktad eh, bumaba yung rate eh. So the market is so liquid because people like you, before, were generating what? 3% in earnings, now it's below 1%. You have to do something about it to mobilize the money to earn a little bit more. So you can take growth positions. You are now enamored to do some business. That's exactly what's happening. The other worry that we have in the past crisis was the dollar exchange rate. Kasi nga malaki yung external borrowing natin eh. As wala pa tayong reserve requirement. So the dollar exchange rate shot up. That was in 1997, from about 30-ish or 24, ganyan, umaabot ng 40 to 50. In fact, the peso lost ground 15 to 20% in given days, within days. Right now, you're not even watching it. It's 48, it's hovering around a low of 48, it's not even going up. So parang, asan yung pandemic, nasan yung economic impact, di ba? And the pluses we had before are still there. The strength of the Philippines as a country remain intact, even with the coronavirus. And for some of them, they can even be better. Like for example, the sweet spot, demographic variable. Average age of 23, median age of 24. Ano lang po ibig sabihin nun? We have more people in our economy who are capable of contributing to economic growth, factor production, and financial income. Yun ang population natin eh. Hindi ba? Just give them the right opportunity, we can churn that domestic market. Because it's a very big domestic market. It's like over 100 million Filipinos. Can you just imagine what happens to a country like Singapore when countries clamp up? When countries clamp up, what happens to a country like Singapore? They're so used to doing a lot of business with other countries. But now, countries are clamped up. What do they rely on? A domestic market of 10 million people. 10 million people. Philippines, more than 100 million people. That's a very important domestic base. So even when markets close down, tama, wala tayong tourism. Bumagsak ang international tourism. Pag nag-open tayo early part of next year, guess what happens? Domestic tourism will be quick, right? And domestic tourism is something that's high anyway. We're not a Thailand. Thailand has been more dependent on international tourists than domestic tourists. In the Philippines, the biggest number of tourists are domestic tourists. So you can just tell, you can just tell from how the composition is of our population, how easily we can get into development. Okay? Next, our credit rating stays intact, which means if we do need to borrow externally, we can borrow at a lower rate. Gross international reserves. Aba, alam niyo ba kung magkano? International reserves is at a record for the Philippines. We have over $100 billion. Let me repeat that. Over $100 billion. Now, let me tell the naysayers, that's not exactly positive. Kasi ang ibig sabihin din yan, we're not importing, we're not manufacturing. Bumaba yung manufacturing output. That's true. But the important thing is, okay yung reserves mo para hindi naman kailangan suportahan yung peso, para hindi mahuhulog yung value ng peso. Diba? In fact, baliktad nga nangyari. The BSP is supporting the US dollar. The BSP is supporting the US dollar. Baliktad po. And lastly, government stimulus package. Alam nyo naman, nandyan ang bayanihan, nandyan ang budget na lalabas. Hopefully, they do it in time. But the important thing is this, that we have enough stimulus in the government to pump prime the economy for 2021. The economy is very liquid, but policies are just taking a bit of time. Hindi naman po biglaan yan eh. And besides, marami pa sa ating takot eh. Marami pa sa ating takot. Can we just ask you a question? Okay? Let me ask you a question now. Well, ayan na pala, nilagay. What have you purchased recently? Ano na bili natin? This last months of the pandemic, it's now like 8 to 9 months, right? What have you purchased recently? Cash or loan? Cash or loan? It can be real estate. You can answer more than once though. You can answer more than once. You can put clothes and shoes if you bought personal gadgets, home appliances, car, and real estate. You can answer more than once. Okay? Tingnan natin kung ano ang pinagbibili natin recently. Okay? So what's our poll result, Jason? Parang natatagalan yata yung ating resulta. Parang wala. Wow. Look at that. Real estate, 21%. Cars, obviously, very low at 7%. Home appliances, personal gadgets, clothes and shoes. So, namamayagpag pa rin po si Lazada at si Shopee. But if you look at it, I said you can tick more than one. If we probably had this forum before the pandemic, the outcome could have been different. It could have been high on all aspects. As the reason why we're getting this economy churning slowly is because of the involvement of the consumer. The involvement of the consumer is not at a very positive note. You look at consumer borrowing now, this is an indication, wala. Car loans na wala. Credit cards, bumaba. So, it's no surprise that the economy, our economy, which is consumer consumption driven. Let me repeat that. We're a consumer consumption driven economy. And if the consumption goes lower, obviously, the GDP gets challenged as well. So wala pong masyadong umuutang, wala pong masyadong namimili. But I'll tell you this, yung takot natin at times can just be getting ahead of us. Look at this. The red line is your non-performing loan ratio. It's what? Below 2.5. Do you know that hit 10%? I'm not kidding you, 10% in 1997. And over 6% in 2008. Now the non-performing loan ratio is at 2 to 2.5. Let's just say it goes up to 3. Mabigat na po yung 3. Is that to be worried about? Our banks are well capitalized now. Look at this. This is the more surprising part. Yung light blue po, yun ang non-performing loan. Yung light blue. Yung dark blue, which is the taller line, is the provisioning. Anong ibig sabihin po nun? The banks have provisioned for bad loans. The banks have assumed na marami sa kanilang may utang na hindi na makakabayad. So nag-provision na sila. Kaya po the banks are not coming up with a high level of income for this year. Because charge na nila sa loan provisioning eh. That just tells you how well capitalized our banks are today. That they can do high provisioning higher than the non-performing loans. But this is what not a lot of people know. Lalabas na po yung FIST. What's FIST? Financial Institution Strategic Transfer Bill. It's a bill now in Congress. Wala naman pasyadong pagkakaiba yung House version at yung Senate version. I expect that to be passed soon. Why am I so excited with that? Kasi po alam nyo, noong 2008 at saka noong 1997, when the government did something like that, it's a bill for SPVs or specialized vehicles, special purpose vehicles, it was too late. The banks were already reeling. The banks were already losing money. Tayo po, malalakas pa yung bangko, well-capitalized pa, meron na kagad tayong fist. What is that? It accords the banks to put up new structures para po yung non-performing loans nila, yung mga na foreclose nilang mga assets, mailipat nila. Without DST, without income tax, without lahat po, in-exempt ng gobyerno. So which means, malilipat yung assets na yon, makakakuha sila ng cash para ipahiram uli. That will tell you that the economy will be recovering next year much faster. You know, when the vaccine comes, I really expect this to fly. So that fist bill, when it becomes law, will actually put this issue back. And I'm not even looking at all of these yet. I mean, may silver linings na po tayo nakikita. Sabi nila, tagilid ang real estate. The biggest sales of real estate are coming from the luxury condominiums and the luxury lots. There are only a few secondary purchases that have been really down. You know, ang mga nagbenta lang po ng palugin na 10 to 20%, yung mga negosyante that were in dire straits. But if you're going to be looking at the pre-sale market, the third quarter is much better than the second quarter being at the doldrums for the whole time. But the fourth quarter is starting to become exciting. It's now hitting about 70% pre-pandemic. Remittances from the OFW, sabi natin babagsak yan. True enough, yes. But do you know how it was in September? Plus 9%. Plus 9%. And we were worried about OFWs being repatriated. Repatriated yung OFWs, di ba? Walang trabaho. Ngayon po, umaalis na uli sila. OFWs are now going out again and getting more jobs outside. Now, this is the biggest factor for me. Biggest factor po, maraming hindi binabantayan ito. Gusto natin itong bantayan. Purchasing Managers Index. It's called the PMI. The PMI is a measure. Pag 50 po yan, neutral. Pag below 50, that's a negative. Pag above 50, that's a positive. But what is that index all about? Ito po yung pagbili ng mga purchasing manager ng manufacturing firms. What does it tell you? Pag positive po yan, that means they are now planning to manufacture because they know that their goods are gonna be sold, that their goods are gonna be getting into a better churning economy. What's nice about this is that only Vietnam is the country in the ASEAN who's at a positive PMI. We joined them in September. The most crucial is this. Naging positive po ang Philippines noong September and it was defined as a change in direction. Meaning, we're now moving into expansion from a contraction much like the other countries from Thailand down to all the others, Myanmar and the whole of the ASEAN. Okay? So, Philippines looking cheap. Mura po compared to the 97 crisis and compared to the PEs of the 2008 crisis, we're looking very cheap. Now, again, our last poll, last poll natin. Do you think that 2021 will be a better year than 2020? Tingnan nga po natin. How many of you say yes, it's better than 2020? How many of you say it's gonna turn for the worse in 2021? Ayan. Tingnan nga po natin. Jason, how many think that wow, isa lang ang only 1%. Wow. Only 1% is saying that 2021 will be a bad year. I'll tell you, all indications and, most of the parties that we've dealt with say 2021 will most likely be a better year for economy and for the business. But the key is to still be selective. Because we really feel that the vaccine will not exactly be there for the first quarter. For the Philippines, we'll probably be looking at it at the third or the fourth quarter. Or even 2022. Kasi po mauuna talaga yung ibang bansa. But if ever, kasi ganito po let's plan for it not to be there. If it comes early, then we're gonna be happy. It's gonna be good for all of us. But to be confident about the economy doesn't need a vaccine. Let me repeat that. To be confident about the economy doesn't need a vaccine because we're seeing that happen now. And we're just going to be very selective. The game has to be still the essentials. The essentials, carried us through the first half. It will be carrying us through the second half of 2020. And the essentials will still be the top performers of the first half of next year. That's a given. Domestic tourism, I mentioned this. We're not dependent on international tourism. So if the country doesn't open up, but we open up internally, the domestic tourists will prop up this market. And it's still the third pillar in our economy. Agriculture. Aside from the NCR, okay, all the other regions of the country are agriculture dependent. So dapat po, yung mga nag-iisip sa inyo na mag-nenegosyo about agriculture, again, tied up to essentials yan. This will be a business that will, be flying high for at the very least 3 to 5 years. 3 to 5 years. The road to recovery will be a function of confidence. It will be a function of confidence. Depende po sa atin yan how we're going to be confident. The average growth path has changed. Umakyat po yan noong 1990s, 1980s, 1.9, 2.9. Ito pong huling dekada, we were at 6.3. Now we're going to be looking at getting it down to about 4.8. No? Sabi nga nila, ito po yung magiging recovery. Only Vietnam will be looking at a V-shaped recovery. We are going to be a swoosh recovery. Okay? These are the forecasts, again, as I've mentioned, of the Ateneo Center for Economic Research and Development. They're looking at 2022 to end at about minus 7%, but a recovery in 2021 to about 4.2% and followed through by a constant at 5% moving forward. Pero alam po natin, syempre ang Ateneo medyo conservative yan. Okay? Conservative po yan. But as I've said, I have to mention them because more often than not, they have been correct. It's just that what we're seeing is that more international analysts and researchers are seeing us much better than we see ourselves. So these are the expectations on the exchange rate, on the interest rate, on remittances growth and inflation. The warning that I have for a lot of people, especially the ones who are in, heavy in time deposits and certificate of deposits. Interest rates are gonna be lower for longer. Ang mangyayari po niyan, mawawala na yung value ng purchasing power ng pera natin, bababa pa yung cash flow natin. That's a double whammy. So you have to be creative enough to manage that situation moving forward. Am I expecting the equity market to fly? If you notice it did, but it's now getting volatile. Kasi dito nyo na po nakikita now, there's now a battle of wits between people who are thinking time to be optimistic, but there are skeptics as well. Alam nyo, kaya namin dinidiscuss asset allocation talaga yung susi. The real key is asset allocation because you know why? When you're doing asset allocation, you're not really so into the selection. You're going to be more emotionally stable. Pero alam nyo ba, and I see this, personally, I'll share this with you. I see what's happening now as a real synopsis of everything that happened in the past crisis that I've been part of. Alam nyo, nakakatuwa. Because this is the truth. Every day, there would be a buyer and a seller. Whether in the stock market, in the capital markets, and bond markets. If there is a seller, there is a buyer. Nakakatuwa po, no? There's a seller and there's a buyer, and both of them think they're both correct. Both of them think they're correct. Time will only be the one telling them eventually who was correct or not. Pero alam nyo, instead of being involved in that, I'd rather sit back, watch them, and just earn the money. I can say that with a lot of confidence. I've mentioned this in many of my previous webinars, many of our previous webinars at Rampver. We always say this. We take advantage of crisis. Crisis will always be an opportunity. How many crises have you taken advantage of? Because it is when it becomes volatile that you have to come in and pounce. For the people who are enamored with fixed income, be careful. Because this is a time when you are going to be losing a bit more value. That's the reason why even if you stay fixed income, dapat po iba-ibang instrumento din. Dapat may money market fund, dapat may bond fund, fixed income pa din, pero merong tinatawag na kahit papano a growth proposition. For those who are looking at real estate, secondary market to surface distress sale opportunities, yung mga iniisip nyong 15-20% drop, dyan po mangyayari yan. But I'll tell you, there have been so few. Property developers have very strong balance sheets. Hindi po sila magbababa ng presyo ngayon the way they did in 97. You cannot expect that. Many of them have very strong balance sheets, much like the banks. They have provision for that. They have great working capital. They will preserve their margins. The only thing they'll offer you now would be good payment terms. Papahabain po nila yung payment term para at least the commitment to come in and get to become an owner is at a low commitment level. So, pag nandiyan po yung pandemya, mababa lang ang babayaran natin. There are properties that are like Makati. Medyo ang ganda po yung pinesent lang namin this weekend. 20,000 plus per month amortization. 30,000 plus per month is already a Makati condominium. It's already a BGC or an Arca South condominium. Because this is what the developers will do. They will not cut down their prices. If you expect that, that wouldn't happen. And why? Because of this. Infrastructure will push real estate values moving forward. There are 248 kilometers of roads, bridges, railways. They're all gonna happen in the next 5 years. Makukumpleto po lahat yan. I'm not saying they're beginning to construct. Makukumpleto po yung 248 kilometers na yan within the metropolis. With that happening, where do you think real estate prices will be? And for those of you who feel, babagsak, tingnan nyo kung magkano binagsak. The steepest would be at around 6%. Some places, especially the ones with rare positions, very small in terms of volume and very little in terms of supply, umakyat pa nga eh. Umakyat pa. So, real estate values are really holding at a certain tight range. We haven't seen them do what they've done in 1997 while that's the expectation. As I told you, yung international fund managers po, iba yung tingin eh. Look at this. This is ADB. There are two relevant things here. Number one, they have changed their view for 2020. Early part of the year, they said, mag-grow pa tayo ng 2%. That was like around April and May. They think Philippines will still be growing at 2%. Binaba na nila po yun. They said, -7 na yan. So parang Ateneo na sila, -7 na yan. But you see, the other relevant side to this is 2021. They predicted it to be +6.5. On their update, they retained it at +6.5. So their view of 2021 is still such a brighter view like before, even if 2020 became a deeper contraction year. And what's best is this. JP Morgan just came up with their own prediction for next year. And what did they predict? 13.5%. Plus 13.5%. All I'm saying, friends, is this. Ang dami na ngayon nagpe-predict ng ito kasi lumilinaw na eh. You know, it was a hazy picture middle of the year. Now 2021 is getting clearer. When you make your decisions in investments, once it's already clear, prices are going to be very different. And this is something that many people miss out. Our friends in ATRAM they have pointed this out. 2022 is an election year. Alam nyo ba yon? A year before and after the election, the PSE actually returns on an average 33%. And this includes the negative year that was the election of Era Estrada in 1998. Kasama na yung 1998, plus 33% tayo. 1 year and 1 year before and 1 year after during the elections. So many people are not seeing that. 2021, yan na yun eh. That's 1 year before the presidential elections again. And that's the reason why, I would probably look at this as one of the factors that would be driving this. These are great logos of big companies in the Philippines. Do you know what's common among them? Kasi po, ito pang isa sa tinututukan ko eh. These factors that I look at probably will not easily be the other factors that a lot of fund managers look at, but this is one of them. These are big companies. And all of them are implementing huge corporate buybacks. Huge corporate buybacks. Ano po ibig sabihin nun? Sila mismo ang bumibili ng share nila sa market. And this is from, hindi po maliliit ito ha, these corporate buybacks range from 2 billion to 25 billion. 2 billion to 25 billion each. So ano po sinasabi nila? They cut down their capex but they have money. Ayaw muna nilang mag-invest kasi hindi sila sigurado sa future. Pero anong iniisip nila? Yung presyo ng stock natin, ito lang eh. Ito lang yung presyo ng stock natin. Alam natin yung value ng company natin malaki. Sila po ang insider, di ba? Sila nakakaalam eh. So binibili nila yung sarili nilang stock. Why can't we do the same? Why can't we do the same? These guys are thinking, okay, I'm at 10 pesos. Yung presyo ng stock ko 10 pesos. Pag binalyo ko yung kumpanya ko ngayon, 30 pesos. I bet ko hindi ko bibilin yung sarili kong stock. In fact, some of them are even questioning it eh. I'm a real estate company. Why will I construct a condo unit, go through the whole process of design, go through the whole process of launching, okay, sell it to clients in the market, do that, and what's my rate of return? 20 to 30%? Ito stock ko na eh. Bibiling ko na lang yung stock ko. Alam ko ang net asset value ko, 60 pesos. Ang presyo ko ngayon, 20 pesos. Why won't I buy that? And that's the reason why they're all getting themselves into a corporate buyback. So bantayan yung mga kumpanyang yan. Kaya mahirap pababain ang presyo nila eh. Kasi yung kumpanya mismo ang bumibili ng sarili nilang price. And for as long as they don't do it to prop up prices. Okay, sabihin ko na po yun ha. Companies don't have to do that to prop up their prices. They do that because they see value in their own stock. In their own stock. Okay? So, because of all that, look at this. This is what we've seen in the last month. Ang question ko po, kasali ba tayo dyan? Nakasali ba tayo dyan? Okay? Look at that line and all of those pluses at the bottom. Di ba ho, we should have continuously invested? Our retirement is years from now. Maybe the education of our kids, some years from now. You're 31. You're 35. You have children. We're gonna be going to college in about 10 years. What's the difference? Why do we stop investing? Because the market is down? If we just continue investing, these are the positions that will be choking up the kind of multiples in terms of returns for the future. Ang masakit po marami sa atin nagma-mark to market pag nasa baba yung market eh. Dapat yung mark to market pag nasa taas, mas maganda ang view eh. Hintayin yung pag nasa taas, doon kayo mag-mark to market. Why? Then you become braver, you become more confident. Pag nag-mark to market ka sa baba, ganun mo makikita lugi mo, hihinto ka. Again, we will question strategies that are not working. And if we forget asset allocation, then probably we'll be doing the wrong decisions. This is the PSE within a month. This morning, it's at 7,108. You know, dropped a little bit, but hey, it's still 20% up. The question I have for many of you is this: have you been a part of that? Kasali ka ba? Kasi kung asset allocation ang view mo, nakita mo bumaba ang stocks, dapat magdagdag ka dun eh. Di ba? Kasi yun ang asset base mo na bumaba in terms of weighting. Decision mo na yun ang weighting, hindi ba? So it's very clear, ladies and gentlemen, let us not be so emotional about things. See, history repeats itself endlessly for people who are unwilling to learn from the lessons of the past. Totoo po yan. Okay? Warren Buffett said this, right? Be greedy when others are fearful, be fearful when others are greedy. Easier said than done eh. Pero alam na nating easier said than done. Di dapat ginawa na natin, hindi ba? So, this is the quote that I mentioned earlier from John Templeton. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. What does that tell you? The emotion is a step behind. The emotion is a step behind. And that's the reason why when we have that emotion of selling, that emotion of capitulation, actually, baliktad po eh. That's the time to increase commitment. And I do hope you now appreciate your Rampver representatives for like being makulit, being at your coattails. Because whether you say yes or not, it's practically us and our family doing our jobs. We will really have to tell you that it's a good time to do so. The time for maximum pessimism is the best time to buy, and the time for maximum optimism is the time to sell. All told, we have to live and dance with the virus. We have to do this very, very well. Live and dance with the virus. Let's take all the necessary precautions, but we have to do what we need to do. Life will have to go on. See, this is the way to go. But money is just money. The bottom of it is what drives us to earn more money. What's driving us to work, to produce, to push for a higher level of capital. But we do that for a reason eh. Kami po sa Rampver, hindi buo ang kwento. Kung hindi namin sasabihin that the reason why we do what we do is for the people who are special to us, the people who we love, our families, our loved ones, people we want to help. Everything that we do should be anchored on this. And if we anchor everything on this, then we look with a deeper, longer term perspective. And because of that, we will be doing the right things. Kasi kung para sa atin lang po, mas madaling magkamali. But if you're doing things for people you love, your view will be a more optimistic, longer-term view. With that, ladies and gentlemen, I finish my presentation.